Hello, my name is Russell Myers. Welcome to Issues Unite. In my last video, I made minor mention of the risk of U.S. bank failures coming in the near future. I wanted to go into that in a bit more detail. Now, it's no secret that since September of 2019, the Fed has been pumping trillions of fiat currency created out of thin air to bail out the repo market, or that this year they have delved all the way down into buying junk bonds by way of electronically traded funds, or ETFs. All these efforts have been for the express purpose of bailing out failing banks and risky investments made by those banks, or loans that were handed out by those banks. Meanwhile, the Fed has not disclosed the names of thousands of banks who have received these bailout funds, or loans, zero interest loans. Most of the funds are in the form of loans, and most of them are low to zero interest loans, and a lot of them are overnight loans, but they're taken out on an every night basis by the same banks over and over and over again. But they range to intermediate and long-term loans. To some, this makes it all okay. The fact remains that these are loans which even the banks must pay back at some time in some way. And this is where problems come in. The loans the banks have issued have been to companies, industries, and even individuals whose ability to repay these loans can be in deep question. In fact, it has become absolutely certain that many of these loans will never be fully repaid, and what repayment does occur will not be in the original time frame of the loan contracts. As more and more retailers and manufacturers fail to make payments to property management companies, equity investment firms, the equity firms will be unable to make the scheduled payments to the banks. This leaves banks with liquidity shortages, as the same retailers are unable to sell products due to low consumer spending, and they are often taking out more loans from banks to purchase the goods which are not selling. And this deepens the liquidity shortage of the banks and the debt of the corporations. Add to this the lost wages of residential loans, with mortgage holders unable to make payments at this time, and the time frame in which they may be able to make payments is becoming less clear daily. These mortgages are bundled into large packages which succeed or fail as a package. Each mortgage is not viewed by banks as individual loans or products. Nor are they accounted for in that way. So when packages of loans fail, it leads to hundreds of millions to billions of dollars in lost revenue by banks. Millions of residential renters have been unable to make full rent payments for the last 2 or 3 months, which again directly affects the ability of equity investors to make scheduled payments to the banks. Cumulatively, the shortage of revenue and equity holding payments equates to at least tens of billions, if not trillions of dollars when you consider both residential and commercial properties, and that is per month. So now we come to several different problems converging simultaneously, which add to these circumstances. First, the Fed has announced that they will be shrinking their balance sheet. This is taking the form of slowing or even stopping the bailout of the repo market. How this works is that as these banks pay off these short-term, low or no interest loans, the Fed is offering fewer to no new loans on the same terms. Because of this, numerous banks and financial firms have started to issue alarms. Bank stock prices are declining drastically, rapidly, though you wouldn't know this by looking at the stock market just yet. The trade war with China is resulting in China making smaller capital investments in U.S. properties, or ceasing investments entirely. This is a wise decision on their part, as they have no idea if or when the U.S. government may seize their properties or their assets. There's good reason for this anxiety. As this is what has been done to assets owned by Venezuela, including gold and all Citgo oil gas stations in the U.S. Because yes, Citgo was owned completely by Venezuela. Considering that much of the initial revenue generated by Chinese industries operating in the U.S. occurs in U.S. dollars, as does the international trade generated by those sales. Up to this point, those sales were transacted in U.S. dollars and later converted to Chinese currency on arrival in China. Chinese companies have also borrowed money from U.S. banks for domestic U.S. construction or expansion, including taking out loans on the PPP program. Now they are becoming less likely to do this. Domestic sales will, of course, by Chinese companies will, of course, be in U.S. dollars, but they can easily demand that any international sales be funded in yuan or renminbi, the Chinese currency. This affects not only bank revenues, but the velocity of international U.S. dollar exchange, leading more toward the increasing velocity of the decline of the dollar. Should Chinese investors choose to close businesses in the U.S., or the U.S. seizes operations or assets, there is the potential for massive unemployment and disruption of the domestic supply line, even worse than what we have seen up until this point. And that would be followed by a number of the largest lawsuits and challenges ever seen filed with the World Bank and the IMF, with China suing the American government. And this would also be followed by other nations divesting from U.S. investments en masse, because they would be anxious and nervous that the U.S. may target them next. All this serves to illustrate further and further that the bailout used by the U.S. government and the Fed, coupled with concurrent trade wars with China and oil wars with OPEC and OPEC Plus have been the worst decisions possible for the U.S. economy and the banking system. As of this moment, Americans have increased the amount of savings they are holding in U.S. banks. They're unsure of what the future may bring regarding their employment and incomes. If the banking system becomes unstable, depositors will withdraw their savings from all financial instruments, ranging from checking and savings accounts to stock portfolios and retirement accounts. In other words, we will see a run on the banks that would make 1929 pale in comparison. If this happened quickly and suddenly enough, banks would be forced to close their doors within days, if not hours, because they would not have the physical currency on hand to meet the demand of the withdrawals. Accounts would be frozen as banking institutions would not have enough in security deposits and are too highly leveraged. The Federal Reserve dropped the security deposit, collateral security deposit requirements for thousands of banks to 0% late last year. So it is possible that not enough physical currency even exists to meet the demand of the withdrawals that would be requested. Right now might be a good time to take money out of your bank, if that is possible. Have cash on hand, because if bank accounts become frozen, that means electronic payment systems will be crippled. Businesses will be forced to operate on a cash-only basis or close their doors. And it's really ironic that that could happen just as the banking system is trying to push for a full cashless society. Now obviously this is a worst case scenario. It is possible that steps would be taken to mitigate these conditions if they are planned for in advance. However, the U.S. capitalist system, including our government, has not planned well for the economic, medical, or social disruptions that we have encountered in recent months. Instead, they remain in denial even after a crisis has begun. They did not plan or even admit that there was a crisis in 2008 until well into the recession. And they only recently began admitting right now that the economy is not doing so great. A V-shaped recovery is not going to happen. It's not, period. Yet the media will still tout how well the stock market is doing, along with delusional, false unemployment numbers. With a government which is slow to respond and only acts in the interests of the most affluent or their own grasp on power, coupled with a media which consistently and intentionally misleads the public for the benefit of the same corporate owners, there is no reason to trust those that are responsible for keeping us informed or safe. There's no reason to believe that our government will act in the best interest of the general populace. It is no longer a question of if the banks will begin to fail. It is only a question of when, and that time is coming very soon. As of this morning, I heard a report that there has been, the beginning of bank runs in China, which has the largest banking system in the world. Well, but even if there's a run on the banks in China, it's not the same as a run on the banks here would be. Because China has a more socialist system which is going to support the populace. They're going to make sure that people are housed and fed and have power and medical care. Here, we don't have any of that security. So even if the banks in China completely fail, they've still got the same governmental system that supports the people. And you compare our systems, and China has a large manufacturing base. They have goods to export, to continue trade. They have gold backing their currency. Here, we don't have that. We have a primarily service-based economy, and I mean local service. There is no way that you can export for trade the output of a local fast food restaurant. So, I mean, we cannot export medical care. We cannot export, hair and salon and, whatever. These are services. We cannot, if you run a landscaping, business, you can't export your service. Whereas if you've got an economy that is based more largely on, on manufacturing, you've got more to trade with, which buffers the effect of any collapse that may occur, or decline, collapse, whatever you want to call it. So if we are going to suffer a collapse, it's very different from any collapse that may occur in China. People keep on wanting to argue that, the Chinese economy is going to collapse and all this. No, if our banking system collapses with our fiat currency and our service-based economy, it's going to be much worse. So, I do advise you to take money out of the bank just for your own safety. Have some money on hand. All right, so that's going to be it for today. Please share this video, discuss these subjects, and if you can, please donate $1 a month to help, maintain and expand this channel. And I hope you have a good day and a good weekend.